Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Tuesday, January 20th. Well, welcome back. After a 3-day holiday, we ended the week last week on the defensive and we kind of saw a little bit of follow through in the overnight trade. We got the wheat market down around a penny, the corn market down around 3 cents, the bean market down 7, the meal market down $1.50, and the soybean oil market down around 25 points. So a little bit of carryover from the weakness of last week. With the major USDA reports now past us, that coming out last week, we think that the trade will focus on 4 items over here over the near term as we work our way forward. The first one is going to be the South American weather and their crop prospects. Number 2, we think we'll continue to monitor our U.S. export pace, how competitive we are against foreign suppliers. Number 3, we're going to continue to watch the world farmer sell rate and cash markets. And then number 4, I think that the trade will monitor what's going on with the outside markets, crude oil, the U.S. dollar, and money flow from the speculators as we now start the trade, working our way into the February time period. Looking at those 4 items really quick in here, South America looks like they remain quite conducive with their rainfall and crop prospects. No harm there, so somewhat of a defensive posture on that state. Our export competitiveness going forward in here in the U.S. Well, we're on a $1.50 break in the wheat market, so hopefully that'll bring back some export demand out of the U.S. because it has been somewhat dismal. Later on this morning, we'll get weekly exports coming on out. That will also compare with what's going on with corn. Good news, bad news. Last week we heard that where South Korea is looking and buying Ukrainian corn, but we also had some U.S. announcements of corn sales here. So we are kind of in the ballpark with the corn. So obviously it's a lot better being sub $4 corn than plus $4 corn as far as seeing that demand. And then for the beans, we saw some cancellations from the Chinese on Friday. We don't want to see that continue because as South America stays on a good pace with their crop, will we start to lose business there. So competitiveness in the world export demand market will also be watched, followed by what's going on with our cash markets here in the U.S. and abroad. Are those South American farmers willing sellers of their corn and bean crops going forward, taking basis levels lower? Will futures prices start to tighten up our basis levels here in the U.S. as the U.S. farmer becomes perhaps somewhat of a tighter holder of grain, perhaps in fact reflecting spread action here going forward? And then finally, the outside markets, what's going on with the dollar? A strong dollar is not beneficial to our exports as we're trying to get competitive in that venue. Strong dollar also makes our foreign suppliers want to go and plant crops, and so that just continues to add to the world supply. And then we'll also be watching that money flow as far as outside markets go. The last commitment of Treasury report that came out showed that specs still have somewhat of a sizable, if not a fair net long position in the grains and in the oil seeds. And if these combination of factors going forward remain somewhat of a non-bearish tint, more liquidation is being seen by that crowd. So overall, somewhat of a lower price action, follow through from last week. Right now, it still looks like a non-bullish environment with the specs still net long. We need a stimulus to go in here to come into the marketplace and rejuvenate the upside in the marketplace, which doesn't seem to be on the horizon at this time. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.